Hello you all, here he's speaking is André Perfeito, I'm Chief Economist at Gradual Investimentos, and today we're going to do one more economics in action that I always do every morning to have some comments, daily comment about the Brazilian economy. Today what I'm going to talk is about two subjects. The first of them is the external sector in China, Germany and Brazil, and I also make a brief comment on an issue that is right now in Brazil very hot, is that the public banks are trying to make the spread between the risk-free interest rate and the interest rate that is the lending rate for the population, make it shorter, make it smaller. We talk about that in a few minutes. First, we're going to talk a little bit about what our finance minister all the time says about there is a war, exchange rate war going on in the world. So what our finance minister believes is that the monetary policy, the easing monetary policies in Europe and United States is making their currencies weaker against the currency of Brazil, China not, but Brazil and other emerging economies, and that makes some problems for our external sector. First of all, there was released today the China external sector numbers, and as we can see, the blue line here is exports, the red line is imports, and the green area here is the net situation between both. We can see here that between 2004 and 2008, just before the crisis hit hard in the economy, we have a very strong surplus in the external sector of China. After that, we saw that they still having surplus in the external sector, but we can see that we have some peaks here of deficit in the external sector. So the situation in China, despite of their control in the currency, they are controlling the currency, is that the external sector is not as strong as it could be, for an obvious reason. What we saw right now is that the world economy is in a slower pace, is not as strong as we thought it could be before. So that's the first issue that I want to mention here. The second is that about the Germany numbers that were released today as well. What we saw here is that the German economy is a machine, so to speak. It's a very strong economy in the external sector, very, very consistent one. In the blue line, we see the export in billion of euros. In red line, imports. In the green area here is the net position of the external sector. As we can see here, it stands still. It's almost the same. The German economy can export because it has a strong and a very efficient economy. Okay, they could have some help of the lower or weaker euro in the eurozone. But see, before the crisis in 2008, 2009, it didn't reach the same level what we saw here. But it's a steady contribution for the GDP growth. So it's a good news for Germany. Of course, this kind of growth can help a lot more now the Germany economy than before, mainly because investments and government spend is not as strong as it was. So the external sector, it will help a lot their economy, but it's not only about currency, about efficiency and about efficiency of German economy. Now we're going to see the Brazilian external sector trade balance, and we see here the blue line again is export, red line import, the green area the net situation, the net between export and import. Again, between 2012 and 2008, we had a lot of stimulus, outside stimulus of the economy, mainly because we saw the commodity price rising, the world economy was working a very hot stimulus momentum, especially because China. Now, we don't have the same stimulus that we had before. And it's not bad numbers. We still have surplus in our trade balance, but won't be as strong and as important as it was in this period. So what we need to understand about the currency war that our finance minister say all the time is that it won't be good for world economy if we had the currency in the right place and the world economy in the wrong place. So the situation right now is, in my opinion, of course, is that we can't do much about that. The currency, the real is going to be stronger, especially because of the difference between our interest rate and the interest rate elsewhere. Ben, that's the first issue about this daily comment. My second issue is that in Brazil, you that have a more attention about the Brazilian economy or make business in Brazil, you know that we are facing right now a very strong discussion between the market and our central bank, if it's possible to make the main rate, interest rate in Brazil, lower, the Selic rate. Right now, everybody believes that it's going to go to 9% per year and stand there for a long period of time. It changed very fast. Last week, the market had a median opinion that in the beginning of 2013, the central bank should increase the Selic rate. It's not in the scenario anymore. What we are seeing right now is that the central government said to the public banks to make some effort to make the spread between the risk-free rate, that is the Selic, and the rate that's the lending rate for the population is smaller. Make the spread is smaller. When our finance minister and our central government do this kind of movement, they are doing, so to speak, monetary policy, and they are making an easy monetary policy. The central bank said in the last minutes that that won't be good for the strategic implementation of the Selic rate if the government do a lot of monetary policy. It's written in Portuguese. I won't translate it right now. But if you see the document of the Brazilian authority, the last minutes, in the paragraph number 27, it's explicit there that it will be good if the central government and the public banks don't do further easing or further loose monetary policy. So the credit can't grow very fast, so we can control the inflation easier. That's a discussion. I'm being very detailistic here. It's not as bad as it sounds, but the central bank said, they write down in the last minute about this feeling, about this desire that the government don't do too much to increase the credit volume in Brazil. They didn't that. We're going to have some question about that during this week, and next week we have the Copom meeting that is going to decide the new Selic rate. Well, that was the Economic in Action, our program, our daily program about Brazilian economics in English. So if you have some doubts, please reach me by my email and we can stress further any detail. So that is, I see you. Good day to all.